First conversation this afternoon. The Central Bank of Nigeria has voted to retain the monetary policy rate. Yes, this happened on Tuesday, and we talked about this, following its monetary policy committee meeting, which held in Abuja. This was disclosed by the governor, Mr. Olayemi Cardoso, during the post-MPC press briefing, which held on Tuesday. Now, all the 12 MPC members voted unanimously to maintain that current policy rate. That's according to the central bank. The decision demonstrates the committee's cautious approach to monetary management, and also as it continues to assess the effectiveness and macroeconomic conditions and effectiveness of recent tightening measures. Well, the CBN highlighted the recent moderation in Nigeria's inflation rate, which eased to 23.71% in April, from 24.23% in March. According to the latest data from the National Bureau of Statistics, CBN also considered some global issues that might shape the projected outlooks in the coming months. Well, let's start our week as we talk to Ms. Nabila Mohammed. She is an investment analyst. She works with Chapel Hill Denham. Thank you so much, Nabila. It's good to start the week with you on the show.
Thank you for having me. Good afternoon.
Yeah, pretty stuff. I think my last line was around the inflation figures, which we saw a bit of decline. I would ask you, what do you think, in your thoughts as an analyst, projecting figures, looking at figures before now, what do you think prompted the Apex Bank and the MPC committee to stay with rates, considering macroeconomic fundamentals surrounding the development?
So in our view, we already expected in-house that we are going to maintain rates at current level, that's 27.5%. And also across the other rates as well, that's liquidity ratios, cash reserve ratios, and even the asymmetric corridor, we already expected that they would hold rates steady. And the reason was because it's not far-fetched. We did not expect that the MPC would be quick to start to cut rates because there was just 1 month of disinflation. Yes, we noticed some level of disinflation in the month of February, but it rose again in the month of March. So it just simply means one thing, that they want to take a wait-and-see approach to understand how this particular dynamic in terms of disinflation and again another resurgence in inflation pans out over the next couple of months. Yes, they will be able to see the inflation print for the month of May, and they will also see the inflation print for the month of June before their next meeting that will be holding in July. So it will help them to really understand if the disinflation that we saw in the month of April to 23.7% was, a one-off or just something that would be consistent through the year. So I believe that that is what their stance is. They are not so quick to take any action. And aside that, even before the MPC meeting was even concluded on Tuesday, we saw them come into the market to, offer OMO bills. That's a way for them to mop up excess liquidity, because all through last week into the first trading days of last week, we saw that liquidity in the system was quite robust, and it just made sense that if they want to send a message to the market, they would definitely want to, show that they are still tight in their stance to rein in inflation, whether it's from the rates perspective or from the signals that they send to the market. And that's exactly what they did with the OMO bill auction that held last week. And we saw for the first time this year that the OMO bills rate closed higher at on average 23.88%, which is the highest we've seen since the start of 2025. And again, that is a signal to the market that because there was inflation in the month of April does not necessarily mean that the committee will take, a dovish stance or a dovish approach going forward. And again, if we look at it from the FX point of view, it also sends a signal to the foreign investors that they are still trying to monitor things, and foreign investors that are looking to, come into markets such as ours that have attractive rates will definitely be emboldened to come and do so. And that should provide some level of stability in the FX market in the short term. So it's just a bit of all these things that I believe the MPC decided to look at and decide that, they are going to take a wait-and-see approach before they make any drastic change to whatever policy rates or the key policy rates and metrics that we decide on every 2 months.
Interesting stuff. But I was reading through and I saw it that this is a time where central banks around the world are beginning to cut rates. You know, they are beginning to reduce rates, some around the world. So these reasons you gave, do you think that is why they are not thinking of cutting? Or when do you think we will start to see maybe a bit of moderation in that rate, considering what the private sector and the likes of manufacturers are talking about, how it's hitting them, lending rates particularly?
So most definitely, the fact that the rates are still high is going to have a ripple effect, of course, on the manufacturing space. And I've seen news as well with regards to the private sector saying that the rates are still very high. And again, other markets that are cutting rates have their own peculiarities. So it's important for us to understand what applies to us here in Nigeria. Yes, we are not supposed to operate in isolation, but that is not the point I'm trying to make. The point I'm trying to make is this. We have our own issues that are structural. We have our own issues that are legacy issues that also fuel inflation. Most of these other markets that we're seeing cut rates, their inflation is not necessarily as a result of production challenges. It's largely, because there's a lot of money. So that's like the demand side of things. But when we're looking at cost push inflation, which really is what our inflation is about, it is not the optics, if I may put it, do not suggest that we should be cutting rates because just like the other markets are doing. We need to observe what is peculiar to us. We need to understand the challenges that are really fueling this inflation, especially around cost-related challenges. So that is one thing we should look at, and that is one thing that I believe even the policy makers, that's the MPC committee, decided to observe or think about over the next couple of months before they make any decision. And like I earlier mentioned, we had disinflation in the month of February. March came and we saw another rise in inflation. Then we saw another disinflation in the month of April. So it's not a consistent disinflation story that we have been printing through the first 4 months of the year. So it is necessary for them to take a further, allow for some more time to observe how the market, dynamics play out over the next couple of months before they decide to start to cut. And again, there are also global fears, which the committee also alluded to, that could likely, affect budget implementation and a number of other things around the lines of fiscal points of view that could fuel inflation. So all these things are what they are considering in the short term before they decide any dovish stance going forward in regards to inflation in the coming months.
All right, then. We'll see how that plays out. Governor Cardoso was quick to speak around our Naira, saying the Naira is now competitive. I'll ask you a two-in-one question with regards to that. I like your views to that submission, what you make of it. Do you think that our currency is now getting to that point? It's now getting competitive. That's on one side. What do you also think about the FX side of the market? There's been a bit of stability. I would agree to that fact. Foreign reserves getting stable. I think we are doing about $38 billion at the moment. Pretty good. 7.6 months imports, which we can cover. That's a bit of stability. But some analysts will say we can still do better. What do you make of that?
Of course, I would agree with them that we can still do better, because on the first, for the first part of your question, which speaks to, if we're truly there yet in terms of competitive currency, fundamentally speaking, we're doing well. We are in surplus. If you look at our foreign trade balance, our current account balance as well is, is up. Over the past 8 quarters, it has delivered, positive current account balance versus the previous period that we have seen. And that just speaks to the fundamentals. We all know that our currency's value is not necessarily pegged to the fundamentals, and that is what it should be on a norm. That it should be pegged to, the fact that you're doing very well in terms of trade, you're in surplus consistently. That should strengthen the currency. It should send a signal that, okay, yes, the country is actually exporting. But we all know that there are structural issues that are still underlining the performance of our currency. Yes, on a year-to-date basis, we are just currency has just depreciated by around 2.8%, which is relatively stable compared to the last 3 years that we have seen the currency perform. But again, we need to see more structural implementation in terms of diversifying our exports, because we're still, we're not really adding value in terms of the things that we export to other countries. And that is what we really bring or attract foreign investors or foreign participation and deepen our trade relations with other countries. When we have diverse products that we send or that we sell out, we are still selling, bulk of our export is still largely oil related. So if they can channel the implementation of policies that would structurally revamp other sectors, whether it's in terms of agriculture, in terms of mining, those are things that in the long term will be able to support the competitiveness of our currency, because we're still reliant on something, and that thing that we're reliant on is subject to a number of factors that are beyond our control, like global crude oil prices and the movement that is, how volatile it is, considering all these tariff talk and all these trade fairs. So these are some of the things that I believe would make our naira very competitive. Yes, we like it has been stable through the first few months of the year, but we also expect that we shouldn't just relax yet, because there are still more that needs to be done. Bulk of the revamping, bulk of the policy reforms that we've seen, yes, enabled foreign portfolio investors to come in, but they still need to see structural changes for direct investors to now come and set up their plants, set up their production companies in Nigeria. We like that some of them are still here, some of the multinationals, but again, all these issues with regards to devaluation also affect their businesses, and that could deter any new entrants into the market, aside, of course, other structural issues. We like that some of the policies that they are bringing in place is to encourage local production, should in the long term, be beneficial to us. But in the short term, what they have done so far is largely encouraging portfolio investors, which you and I both know they can just wake up tomorrow and decide that they want to exit. So all that is what the stability that we're seeing in currently is largely attributable to bulk of that particular portfolio investment inflows. And we know how this is, there's also the demand side of things, the demand of FX. Now, we've spoken to the supply side. The demand side of FX comes sometimes depending on the season. Now, when we start to see a lot of people demand FX either for school, for other forms of invisible transactions, that could put some pressure again on the currency. We started the year at 1513 levels. Now we're at 1590 levels. So there's been some level of depreciation, and it's largely as a result of all this seasonal demand. And we've seen the central bank intermittently intervene in the market. And this just shows that they themselves are aware of the pressures that could come. So they are still actively playing in that space. Ordinarily, the market should be, very, in terms of inflow and outflow, should be very free and less of the regulator being in it. Not that the regulator should be entirely left out of it, but there should be some level of more participation from other parties and not necessarily the regulator. So in summary, what I'm just trying to say is that, yes, we like that it has been stable, but in terms of how competitive, for the Naira to really be competitive in the long term, all these issues around structure should be addressed. Diversification of exports should be adding value to the export as well, should also be considered if we want to see the Naira become very competitive in months and, of course, in the long term.
Nabila, interesting conversation. I must say, you've touched on the tariff issue and what's happening globally. And while I would like to ask you how global trade and all of this back and forth with Donald Trump's tariff affects for Nigeria, what it holds for us as a country, I would like your views around that. And how do you see that vis-a-vis Nigeria first policy at this time? That's what President Tinubu is out for at this time, just giving it back to what is happening in America. America first, and President Tinubu is saying Nigeria first. So looking at global trade and how that affects us, putting it side by side, what do you make of all of this as an investment analyst that you are?
So to be honest, Nigeria first policy that Tinubu is trying to introduce is going to be a tall task. And I will say this because we are still largely import dependent. We do not have the factories that are already in place to make sure that if we decide to put ourselves first, we would not bear the brunt of it. We don't have those factories, we don't have those plants, we don't have a number of all those things. So if all those areas are addressed, yes, that Nigeria first policy would definitely be favorable to us. Now, imagine with all this tariff talks, we should have been able to stand up, rise up to the occasion of, okay, if you are slamming this China with this particular tariff, imposing this particular tariff on Chinese imported products, yes, why not import from us? Why not buy from us? But we cannot raise our shoulders to say that import from us because we've not really structurally added value to the product or the exports that we sell to other countries. And that is one thing I believe that if we want to really put Nigeria first, we need to address as a nation. Yes, there are opportunities here and there for the country to, come up, look at areas that these other countries that are being slammed with tariffs can make up for. But there's also the flip side of things and how it affects the commodity market. It is good that our crude oil is burning light, and as you rightly showed on the screen during your market review, you saw that burning light was $78. What we really need to do right now is make sure that we are able to ramp up production. At least we need to be budgeted 2.06 million barrels per day that the country expects to deliver in the course of this year, but we're still around on average 1.67 million barrels per day. It means there's something that we need to do in order to make sure that we do not bear the brunt of that. So all this really are things that I believe that policymakers will be able to look into in order to make sure that whatever tariff or trade fears that occurs, we are not necessarily affected by it in the near term.
All right, before I let you go, what do you think will be in the front burner as we prepare for the July meeting? July is just around the corner. We are by the end of this week, we are getting to the month of June. So by July, there's another MPC meeting. What do you think will be on the front burner as the committee prepares for this gathering?
So barring any adverse economic shock or events, they will still be observing inflationary trends. They will still be observing how the FX market plays out. And all these things will definitely be at the front for the committee members when they deliberate or meet in the month of July. So I believe that they're definitely going to be observing whatever is going on in the market going forward, and also paying close attention to global trends as well, and how it will likely impact us as a nation. So those are things that they would look out for over the next 2 months before they meet in July.
Nabila Mohammed, investment analyst, Chapel Hill, Denham. I must thank you so much for starting the week with us on our show. We appreciate this. Have a profitable one.
Thank you very much. Thank you for having me.